I'm here with Ed Pierzak, Senior VP of Research and Investor Outreach for Nareit, and we're here at the REITweek conference. Ed, thanks for taking some time to chat with me.
Absolutely.
What's new this year for REITs?
So I think the big thing this year is the performance story. So we did have an unexpected shock with the conflict in Iran, and we saw prices go down, but we saw REITs rebound very well, in fact, faster than we did with the broader markets. And with that, we've seen some, really kind of opportunities for outperformance.
How about mergers and acquisitions? Should we expect more of those this year?
Yeah, so that's definitely been in the news quite a bit these days. I think the ones that often get the headlines are the privatizations. And our perspective on the privatizations is this is really just the market working as it should. Oftentimes you find that there are smaller REITs, but they are going at premiums. But if you look at the data going back to 2020, in fact, you find that the majority of transactions, both in count and in value, are publicly listed to publicly listed REITs, and a lot of those reasons stem around issues like size, scale, economies, and also complementary portfolios.
So fewer REITs, but the same market cap for REITs, or larger?
Well, yeah, I think that certainly if you take a look at the value of REITs, that they are increasing. They've grown quite a bit over the years, and I think that we're currently standing at about 1.6 trillion. So although the number may be down a little bit, the absolute size of or the market caps are quite a bit larger.
What are the hot sectors this year, popular with investors?
So we get that question asked a lot, and we don't really forecast the sectors, but we have something called our active manager tracker, and it really tracks the positions of the largest actively managed dedicated REIT funds. And if you look across the board there, both in terms of the overweights and the increases, there's really no surprise. We see that there's been big movements into data centers, into healthcare. We're starting to see some more movements into retail as well. But then we are seeing some move outs of residential. So as you kind of look across everything, it's very much consistent with both trends that we're seeing today as well as fundamentals. I think one of the interesting elements, though, is when you look at the under and over weights, particularly for the four traditional property types, you'll see that now this past quarter, we see underweights in everything but office. So office is still maintaining an overweight.
Yeah, I know in seniors and in data centers, there were two big IPOs this year that were really exciting. Do you think we're going to see more IPOs and more large IPOs?
Yeah, no, I think that these develop over time, and but I do think that we'll likely see more IPOs going forward. I think that as we take a look at the REIT form of ownership and really just the opportunities, one of the things we often track are REIT balance sheets, and when you take a look at REIT balance sheets on average, they're relatively low leverage, but also focused on both fixed rate and unsecured debt. And that unsecured debt is actually a very important element. I think it provides a competitive advantage, and I think that it would appeal for a lot of folks who are contemplating an IPO.
What is the biggest challenge and the biggest opportunity for REITs this year?
So I think the biggest challenge, it's not only for REITs, but I think for the broad real estate market. I think that the property transaction market has fallen off quite a bit. And a lot of that stems from still kind of the divergence that we see between public and private values. So, on the one hand, we're not seeing a lot of transactions. There's been some indications that it's heating up a bit, but certainly REITs are very well positioned, both with their operational performance and balance sheets to kind of jump in and be active participants in that. I think, really kind of the opportunity with REITs, we started the year and said that there was a dual divergence with REITs, one with the broad equity markets. And as we've kind of seen those two markets, kind of converge or get in sync with one another, we've generally seen REIT outperformance over the first portion of the year. Also importantly, we have a divergence between public and private real estate values. Now that gap has still stayed relatively wide. It's roughly it's a little under 150 basis points. But again, as we see, that gap close, we would expect REITs outperform private real estate.
Okay, Ed, thanks very much.
Okay, thank you. Pleasure.
Okay.